Great. I'm Caleb Dorfman, and on behalf of the Tuck Center for Private Equity and Venture Capital, I'm pleased to welcome you to this panel discussion on agricultural marketplaces and the way agricultural products are traded. With us today, we have three esteemed guests who can talk about the different areas of the value chain and how agricultural commodities make it from the farm through the entire process system and actually to you as the consumer. So first, I'll take a little bit of time and introduce our three speakers today. So first is Brennan Turner. Brennan is the co-founder and CEO of Combyne, which is an agricultural marketplace. He also has his roots in farming, as his family has a large 70,000 acre farm. Prior to co-founding Combyne, Brennan also worked as a Wall Street analyst and commodities trader, and he holds a degree in economics from Yale University. Next is Gordon Russell. Gordon is the head of U.S. grains and oilseeds at LouisDreyfus Company, where he's worked his entire career. He's a graduate of Dartmouth College. And lastly, we have Dallas Hansen. Dallas is the director of trading at Arthur Trading in the Arthur Companies. Prior to joining Arthur, he was also at LouisDreyfus Company. He's also a graduate of Yale University. I'm happy to have all three of you here, and I know that not everyone in the audience is completely familiar with your company. So I want you to sort of talk, each of you take maybe 1, 2, 3 minutes and sort of talk about what your company does and where you sit in the agricultural value chain. So I guess, Brennan, let's start off with you.
Sure. Well, hey, thanks, Caleb, for having us. And I've been fortunate enough to sit on a couple of these panels so far over the last couple of days, and I mean, just a fantastic Rolodex of speakers here. So I want to talk a little bit about Combyne. Take a few minutes here. Basically, we're an agricultural trading network and data platform. And context, I'm from a farm, as mentioned. We have a pretty big farm between Saskatchewan and North Dakota. It's kind of spread out between 7 different families, but basically after spending some time on Wall Street, went back to the farm in Saskatchewan and thought about how to do cash grain trading better and more effectively and more efficiently. And so that led to the genesis of the company that we have today. And we've done some pretty innovative things, and it's been recognized by Forbes and a couple other companies over the last number of years. But at the core, basically what we do is we kind of provide this middleware opportunity between farmer systems and the tools that are used by farmers. So these could be farm management systems, maybe a precision ag platform, be able to package over this information and surface it up into the trading ecosystem, and specifically into a buyer's tool if possible, or if applicable. And basically, if that deal gets completed, then we just surface that deal back into the farm management system. So basically, we route this data between the different systems. And at the end of the day, we're talking about connecting, standardizing, and capturing all the data between these different trading relationships that do exist in the physical world. But ultimately, how we make money is by aggregating and anonymizing this information and then being able to monetize it. First and foremost, we give some insights back to our farmers and buyers that are using our platform, but there's a plethora of different food manufacturers, CPG players, even data feed companies that are looking for interesting data sets on things like yellow peas, which is one of the main commodities that goes into plant-based protein and whatnot. So we accumulate data a couple different ways. Deals done directly through our platform, target offers, as well as we have a tool that we're be able to capture contract data just by taking a picture of it. So some pretty innovative technology, but core to our technology is being able to surface up some of the sustainability things that farmers are doing. And so by partnering and integrating with some of the largest precision ag companies, specifically here in North America, we're able to actually showcase things like, yes, this farmer did produce a carbon credit associated with these yellow peas or this corn or this soybean field that they're selling the grain from. So, some really interesting things. And, at the end of the day, we're an ag data transparency certified company, one of the few in the world. And so we really care about how farmers think about us, how buyers think about us, and ultimately how the data that is flowing through our system and we're helping flow is used by us and by them as well. So that's kind of the Cole's notes on Combyne.
Fantastic. Thanks, Brennan. Dallas, do you want to talk to us about your role at Arthur Trading and the Arthur Companies?
Sure. So Arthur Companies is, kind of an old school grain company, I would say. So we've got several different, holdings, but I think for the purposes of this call and this discussion is, kind of our core grain handling assets. So, at our core, we're buying grain from our network of farmers. We're working with them, agronomically to make sure that, their chemicals and fertilizers are, best for them. We do that like kind of a bespoke style where we, spend a lot of time on that. And then, we'll purchase the grain from, our core customers or, some other customers that we're always trying to get, and we will move it on the chain. So, we'll move it, on a train and it will go to an export facility or interior. Now we've got, other holding companies that, do a whole, farm to fork. But I think for this discussion, just a basic, your elevator that, 90% of U.S. agriculture farmers sell to.
Fantastic. And Gordon, do you want to talk to us about the LouisDreyfus company?
Sure, thank you. Just real briefly, we're roughly 170 years old, founded in France, a family-owned company. We sit basically along the entire value chain, so from production side, depending on the platform, all the way down to the end user side. So a lot of what we do is grain origination, grain handling, processing, and then exporting. Biggest platforms that we have globally, grains and oilseeds. We're a large leader in the cotton space, coffee, shipping, as well as rice. And a little bit more specifically in the U.S., we have 2 ethanol plants, about 175 million gallons of production between the 2 in Iowa and Nebraska. We have a big soy methyl ester biodiesel plant in north central Indiana. And then we do grain and oilseeds exports out of Seattle and the Miss River. We export about 9 million tons a year. So our point is really to connect the origination side with end users globally around the world.
And I guess for a sense of context, Gordon, I think that last year's revenue was around 32 billion. Is that correct?
That's about right. Yeah.
Okay. Yeah. So LouisDreyfus is obviously one of the biggest players in the ag space. I think that it was helpful to hear from all of you on where you sit in the value chain, because we really do have someone who sits in every step of the agricultural commodity marketplace value chain. I guess, Gordon, in Dallas, many people don't really understand how physical agricultural gets transacted and then makes it to market. Maybe can you walk us through a little bit more in depth on how you're actually interacting with farmers, how the grains that you're transacting in get to market, I guess. Dallas, do you want to start off and then hand it over to Gordon when you actually transact with Gordon's players?
Yeah, no, that's great. So, the way that we look at a grain transaction is, we're trying to work on the farmer's goals or what they're planning on planting, before the planting season. So December, January, February, we're sitting down with our producers, kind of going through economics and saying, okay, what is my best crop to plant, and then further, like, when should I plant it? Which on my, what of my, 5,000 acres should I plant said field, and then go from there. So, our farmers are going to plant whatever they're going to plant, whether it's corn, soybeans, peas, barley, and then, they'll grow the crop. So, say October, on average for corn, November for beans. And then, typically they'll either sell it to us in a spot delivery, which would mean, sell us grain shipped in the next, 1 to 2 weeks, or, something in the next, 6 months. And then our position, or what the grain handling aspect of the business is, we kind of decide what we want to do with this. Do we want to, be long a bunch of wheat? Do we want to be long soybeans? Do we want to be long corn? Or do we want to be short everything? And simply, as soon as we buy from the farmer, we want to move it to move it down the value chain. So, it's November. We have a lot of soybeans being harvested. We like to sell some of these soybeans because we're, have too many for inventory. So then we'll go ahead and contact Gordon in this case. Gordon probably doesn't do such transactions anymore, but he could in a pinch. So we will sell him a train of soybeans. Now we can either sell it delivered or it can be FOB. He can handle the freight, but for this transaction, we'll say we will sell him a train into Seattle of soybeans. So after this, our hands are a little bit washed, I guess, and we're going to move on to the next thing. So that's kind of how we sit in the value chain, trying to get as much, grain from the farmers, make sure the farmers grow the best grain they can and the best yields, and then, move it on to the global end user, in this case, Gordon.
And then from Dreyfus's perspective, we do a bit of both. So we have some direct producer origination. So we kind of sit at some choke points. Consider the processing assets to kind of be your choke points, your hubs. We have grain origination in St. Louis, which as every class 1 railroad in the U.S. is feeding in, and then is probably the biggest truck market in the U.S. for grain origination. So working directly with producers, and then as well as commercials like Dallas mentioned. So we would be buying either truck into certain hubs, or we would buy loaded barges from some of the other commercials that are along the river, or would be buying rail from some of the Western commercials, and then taking that grain either to the river or taking it west to the P&W. So then once origination is done, we then process that grain. So we convert corn into ethanol, or we convert soybeans into soybean meal to feed the poultry space, the swine space, and then take oil and make biodiesel, or we export that grain. So grain moves down the Mississippi River by barge and out by vessel, or moves out to the West Coast via either the BN, UP, or CP, and then the majority of the grain that goes off the West Coast is headed to China or Southeast Asia.
That's fantastic. I think that really helps elucidate what really happens in the value chain. But Brennan, your family owns a farm. You're a farmer. I guess you probably saw something in this process that wasn't going exactly smoothly for you, and that's really what precipitated you founding Combyne. Can you sort of talk about the frustrations that you, your family, your fellow farmers were really experiencing in the existing system, and how you targeted Combyne to sort of solve some of those issues?
Yeah, so I think first and foremost, and you heard it on the last panel, actually, Gabe mentioned it perfectly. Like, these relationships in agriculture, they're deep, right? They run sometimes generation deep. And the reality though that I found in terms of coming back to the farm and kind of taking over some of the grain marketing initiatives was I was having the exact same conversation with all of my buyers over and over and over again in terms of, hey, this is the wheat I'm looking to sell, this is the canola I'm looking to sell. Here's all the quality. This is when I'm looking to move it, so on and so forth. And basically, what I deduced was that the cash grain trade experience or process is literally a 3-part equation. The first is that you got to go prospect the deal. It doesn't matter if you're a buyer or a farmer. You got to have this conversation with your trading partner, the one that you have that relationship with. Second is that you got to negotiate some of the parameters. Often case, it's usually, hey, let me get back to you and firm up a couple things before I can commit to something anyways. And that usually means calling somebody else. And then the third option, or the third piece of that puzzle, is the execution. So this is where I actually deliver it to an Arthur Companies elevator, or maybe it's a LouisDreyfus crush plant there in Yorkton, Saskatchewan, which I've personally delivered to many times. And the dynamic is that once I deliver it, I'm going to get low tickets in terms of, hey, this is what I've delivered. And where we come into the fold at Combyne is our goal is to be able to share this information not only from the farm management system or the precision ag tool that's used, and to be able to kind of share it all the deal that I'm looking to do in a kind of a one-to-many approach. Here it is for all of my trading partners to see. Here's the details that you need to know. Hey, now let's start this negotiation process. And again, these are my trusted trading partners that I'm sharing the deal status with. And we can jump on the phone. We can chat through the little functionality that we built on the system. But again, core to this whole process is this network of trusted trading partners. And so, bottom line is that a couple of years ago when I was starting the company, I kind of employed a process to kind of share the deals that I was looking to do across all the commodities that we were trying to sell with all of our grain buyers. And given just the we grow 16 different types of commodities, 4 different types of lentils, 3 different types of peas, 2 different types of chickpeas, 4 different types of wheat, right? So we're growing a lot of different commodities, which means we have a lot of different buyer types that we're dealing with, not just Arthur companies, not just LouisDreyfus. And so what it come down to is kind of sharing in an email format this one-to-many approach of here's the deals that I'm looking to do. And frankly, just the efficiency gains associated with that were pretty incremental. And now what we're seeing, the next wave of efficiency gains is integrating directly into the various tools to make this flow of information related to my specific deal that I'm looking to do a lot faster. And then ultimately the execution of that trade, forcing it back into the other tools that the farmer or the grain buyer may be using. It just, there's efficiency gains abound, basically.
That's awesome. So I guess for either Jordan or Dallas, how about the transaction side from your side? What are the difficulties that you face sometimes on the sourcing side? Is there an easier way to actually go about sourcing or transacting that you wish there was? What difficulties do you experience?
Well, I mean, right now the aspect is farmers really aren't interested in selling too much. So, so like technology, there could be a part where
Dallas, can you explain why though? Why they're not selling right now?
Yeah, I mean, 2 things. One, prices have gone up, significantly over the last, 8 months, 6 months. And farmers generally have a really, really good balance sheet today. They generally had nice crops last year. They've had in the U.S. they've had a lot of government programs that have been helpful to total income, and they've seen a market that's kind of gone straight up. So it's difficult to really buy a lot. There's not a lot left for old crop, and for the crop that they're currently planting, they're not really interested in selling a lot. So so that's really been a challenge. But I think going maybe a step beyond that, one of the biggest challenges that I see is a lot of the traditional grain farms that we deal with, and I grew up on one myself. I'm a 5th generation farmer. If I was going to go back and farm, chose not to do that, but obviously love the industry. But there really isn't a big plan for a lot of these farmers. They don't know what they're looking for. There's nothing like a return on equity or a return on investment or even a return on time. I mean, some farmers have a vague sense of, I want to make this much money, but that's, like a really wide range, and those are kind of few and far between. So, I mean, this is just, one of the many problems with dealing with a lot of small family farms, but it's hard to get a lot of the producers focused when they don't necessarily have a plan. And that's just a challenge that we have today.
No, that's interesting, because one of the things that's widely known in our space is farmers are great producers, but they're terrible risk managers and terrible marketers, terrible traders, right? They always think it's going up, and they're always the first ones to sell as it starts going down. It really takes a down day to convince the farmer to step into the market. But I think that's interesting what Dallas said, is like giving farmers tools to really help them understand their economics and then encourage them to participate at levels where they know that they have profitability. But I think what Brennan mentioned is kind of this integration between the merchandising piece and then giving farmers the connectivity that they want or need for the programs that they use throughout their process. So be it on the agronomic side, tying into Deere, or all the way downstream, tying into their accounting software, their tax software, so that everything is in one place. That doesn't really impact our merchandising so much, but it does create that convenience factor for a farmer, and could create a bit of stickiness in a relationship. I think the one thing that Brennan also mentioned was you talk about having 6 or 7 different buyers. Well, I think in Canada, you probably have a few more hubs. In the US, I would argue that there are very few hubs. If you look at the majority of farmers, they probably sell most of their beans and corn either to one co-op, or they sell their corn to one ethanol plant and to one soybean crushing plant. So creating that sticky relationship is part of the personal piece, is going back several generations sometimes, depending on the location. But it also comes down to what can you provide the farmer to make his life easier.
So Brennan, Gordon and Dallas were just talking about risk management, transparency, having the farmer being able to see what price is actually out in the market. Can you sort of talk about the Combyne platform, how you sort of help facilitate grain transactions and the value that it adds to the farmers and that you're really seeking to add?
Yeah, so I think the first one is some of this input of data, right? Like if I were to call Dallas or one of the LouisDreyfus buyer at the Yorkton, Saskatchewan crush facility, they're asking things like volume, what crop year it was, what is the moisture content. If it's wheat, then there's a lot of other parameters in terms of the falling number, the HVK levels, the moisture, the protein. Like there's so many different factors and attributes that go into the details in terms of what kind of silo you fall into in terms of the quality that you're presenting to us and what we can potentially pay you for that today at market rate. So what we're doing is trying to help basically sync and share all this information in real time. And again, Gabe talked about in the last poll in terms of standardizing this information. So we've built a variety of different APIs to connect it to a variety of different tools, both on the farm side and the buy side, to be able to standardize this for market making purposes. I fundamentally think that the digital adoption wave is only going to increase on the farm. We know for a fact almost 2/3 of all farmland in North America are going to change hands to the next generation in the next 10 years. And so if you think about that next generation that's coming up, they grew up with technology in their hands, right? And they understand the power of some of these tools and why I should be using this. I mean, we started using GPS on our farms largely because I made a bet with one of my uncles that I could see better than he could. And once he realized the value of how the efficiency gains extrapolated out over many years, there was a lot of value in that. And therein, that's when I think the kind of the switch starts to flip in terms of the farmer starting to think about what other areas can I gain efficiency on. And so specifically coming back to the Combyne platform, one of the products that we'll be releasing later this year is being able to resurface some of this contracted data, again, aggregated and anonymized, but give some context to both buyers and farmers alike of, hey, this is what the market's doing in your local area, and kind of give them some of those insights. Keep in mind that we're neutral in all of this, right? We don't take title of the grain. We're not involved in the actual transaction execution process. Those things happen already today between buyer and farmer in that relationship. We're just here to help facilitate that conversation and make it a lot more efficient whether it be sharing the initial deal details or sharing that information back once it's contracted.
So one of the things that I really noted when I was listening to both you, Brennan, and Dallas, is your families have been farming for generations. A lot of farmers have been farming for generations. What are the hurdles to getting new platforms and methods of transacting adopted? Is it easy? Is it hard? What challenges are you seeing?
I mean, obviously, Brennan, you can answer this better because that's your job is to answer this. But I would say, generally speaking, the challenge that we have from my farm and just all the farmers in general, you basically have farmers that want to put their entire crop on a piece of paper, and all, like my father's guilty of this. He'd put everything on there, and we're just trying to get them to digital. Right. So like the first step is really that, which it seems kind of like the basics, but I think for a lot of producers, that's where we're at is where on that where are we on that? My dad was 58 and he's considered a young farmer. That's worrying, right? So I really am interested in your view on this, Brennan. Like, how do you think and maybe this was kind of the point of this discussion. How is the next generation, actually going to farm, and are they going to be the ones that are going to make the big switch to technology? Now, on that I don't know, because you've got some of our young farmers that really like technology, and some of them, like to do things exactly like their grandfather did. So there's still just that type of challenge. I'm always interested to see how this is going to play out. I mean, honestly, it's taken longer to see any type of technological adoption on like our farm than I expected. But maybe that's just my sample size one, right?
Yeah. So I mean, I think maybe some preface here. I saw a poll a couple of years ago that basically had 3 buckets of what type of farmer are you, and the first bucket was I'm a plant guy, I'm a soil scientist person, right? Like I love growing a crop. The second bucket was being a mechanic, and I can fix anything under the sun. Then the third one was a true business person in the sense that I care about the dollars and cents. And basically about 45%, about 90% of farmers fell into those first 2 buckets of either being kind of a plant person or a mechanic person, whereas the last 10% fell into that business person bucket. And so I think, though, that as the tools that are being used on the farm become more evolved in terms of being able to provide real-time insights relative to maybe what the market conditions are doing or whatnot. And again, I agree with Dallas that the adoption curve is going to be a slow one because we only grow 1 crop a year usually in North America, Europe, and in some places of South America, a similar dynamic. But that means that you can only test the technology 1 time. But here's the probably the most empower or a thing that I'm excited about probably the most is that farmers are social animals. Like the community of agriculture is so strong and so deep. And so if you see one farmer, your neighbor, doing one thing, you ask, hey, what'd you do different this year? They're going to tell you, hey, I used this new thing and it was this way. And, this is why I liked it. This is what I don't like about it. And they basically get that peer reviewed feedback in real time from their neighbors. And so I find that like GPS technology, it's used largely in most equipment today because there was some people at the early stages that wanted to try out the technology. They saw the efficiency gains, including my family, and now almost everyone uses it. So it's kind of a similar dynamic as you think about maybe precision ag or digital farm management systems. And again, because we know that there are farmers who are going to be the laggard adopters to some of these technological processes, we here at Combyne, we're literally developing tools such as an optimal character recognition functionality to capture information from that piece of paper and convert it into a digital format to make it more not necessarily transferable to the people that matter to you. It could be your accountant, could be your tax person, or maybe it's your farm partner for that matter, but also to be able to glean further insights in terms of, hey, this is where you sold, this is where your average cost of production was based on the other information you provided, and this is what your return on investment is. So, it's thinking about how do we collectively as an ag tech industry potentially move or diversify some of these plant experts and these mechanic experts to being able to get the insights to make them maybe a little bit more in that business person category.
That's great. So you mentioned insights a couple times. I guess, Gordon, you're transacting on a daily basis with some of the world's largest food producers. What information are they asking for you on the traceability and analytics front? Do they want to increasingly know where their grain is coming from or the attributes of the farm that it's been farmed on? How is this changing?
So I would argue in the US that for feed grains and the oilseed space, the answer is mostly no. There's not a big enough push yet in that space for the true traceability. But perfect example of traceability would be EPA approved beans down in Argentina. So massive rollout in this new RD space, renewable diesel, the co-processing in the US and in Canada. And you have to have a defined farm in Argentina that was not deforested prior to some set date. And so there is then traceability of that being produced in Argentina to the processing plant. The oil has to be segregated and then shipped to the US in order to qualify for RIN generation. So in the biofuel space, it already exists. In the food space, let's just say on some of the smaller grains, lentils and whatnot, there absolutely is that traceability, same for coffee. But in the row crops, I would say we're not quite there yet. I think we're headed in that direction. Certainly when it comes to some of this discussion on carbon sequestration and VCOs and whatnot.
Do you see that changing though, Gordon?
Oh yeah, we're definitely headed in that direction. It's though finding a consumer base that wants to pay a premium.
You got to pay for it.
That's a tough thing. You can differentiate your products and try to create that stickiness, right? But someone's only going to spend so much money to create that stickiness unless they're able to get something in the end. Like a company like Dreyfus will do the work, but if the consumer isn't there to validate that work, you kind of revert back to the meat.
So Gordon just brought up carbon sequestration. It's like, Brennan, I think that you've talked about, there are other agricultural derivatives and products that you're actually going to be able to identify within the Combyne platform. It's like on the carbon side or on the nitrogen side. Can you sort of walk us through some of these other products and other ways that farmers can actually differentiate their grain?
Yeah, I mean, fantastic question. I think fundamentally farmers across the world are already doing a lot of great things. I mean, you see some of these reports come out from the UN or whatnot, and there's a blanket statement about how farmers are doing, producing agriculture, producing goods. And, I would say that here in North America specifically, obviously we've been able to produce more with less because the tech stack of some of the genetics are a lot better. The crop inputs that we're using are a lot more precise in that sense. And so we are being, healthy stewards of the land, or else we wouldn't be able to produce more with less. And frankly, we've adopted a couple of different technologies in our farm. I wouldn't say technologies per se, but production practices is the better term. We've tried cover crops in a couple of different fields. And again, keep in mind that we've done this at our own cost, right? There's no subsidies per se to go try these things. I know that there are some things in like Iowa. I think it's like $5 an acre if you plant a cover crop in the fall, right? But there's largely not a lot of incentives from the market or the government, for that matter, to adopt these specific practices. And because, again, we think of farmers as social animals, they don't see their neighbors doing it, so why should they even try to do it, right? And so I think that by providing some visuals and hard facts about these are the long-term benefits, more farmers are willing to kind of flip the script on that a little bit. But there's a variety of different things that we're already hearing from it. And context here is that I sit on I'm a co-chair of the Market Access Committee for the Canadian Roundtable for Sustainable Crops. And what we do is we think about what are the low-hanging fruit that farmers are already doing today that the market is caring about, right? And so these are things obviously like carbon sequestration. On my farm specifically, even though there's no carbon credit for it in Canada, because there's literally a market, it just doesn't exist today. We sequester between 15 to 20,000 metric tons of carbon a year. Like, we've done that math. We know this for a fact. But again, the market there's no way to promote it or showcase this reality. I think that's changing. It's been a couple of years, but other dynamics are, I use fertilizer selectively. I don't just blanket every single acre with 95 pounds of nitrogen per se. I'm using a little bit here because there's a nutrient deficiency in this specific area of the field, whereas this area, it's already got a pretty good soil diverse base, and I don't need to put more fertilizer down. The last one I would think about is some of the biologicals that are coming down the pipeline in terms of these enzymes, these naturally occurring enzymes that basically catalyze some of the release of the nitrogens and the crop inputs that are being used, fertilizer, chemical, whatever it may be. And from that, we're actually able to use even further less crop input. So, specifically for the Canadian Roundtable of Sustainable Crops, like, there's literally over 170 different potential production practices that one could employ to be considered sustainable. Right. And so I think that, the world is starting to kind of coalesce together in terms of this value chain of what's important, really, what's not important. But fundamentally, what I think I've learned the most over the last couple of months in terms of this specific role around sustainability is that labels at the consumer level tend to win the day. And so if the agricultural industry can agree that, hey, this is an important label, or yes, farmers are doing at least 5 or 10 or 20 of these specific sustainability recommendations, then this should be considered a good thing. And again, keep in mind, farmers are doing a lot of them today. They're just not promoting it or broadcasting out to the general public because no one's cared about it until now.
So Dallas or Gordon, if people start caring about this, how do you think these different types of farming practices could actually impact pricing? How much of a premium do you think you might be able to see on some of the different crops for, let's say, a low carbon grain or something like that?
I mean, I tend to think that the carbon will just be marketed separately from the grain for anything resembling row crops. Now when we think about, our sister company that does more specialty crops, I think that there's some push there, but we're talking about, you could have two or three farms would create all of the grain for, just say, like, barley or, peas or something. You could do something selective where, like, Brennan, your farm could make enough for X amount of food, and then that would just be like a direct transaction, right? But for anything on, like, grain, I don't see that happening, and I think that the carbon credits will just be, whether it's $20 an acre or whatever it ends up being, will just be additional income to the farmer outside of traditional transactions. But that's just my guess today.
I think, like, on the row crop space where you're pushing into processing, I absolutely agree. When you think about organics and non-GMOs that are going into specialty proteins, I think you could end up with labeling there where you end up being able to extract higher value through the finished product. So yes, you would end up with a credit that would be saleable, but I also believe you would be able to extract some additional value on the end of the finished product side.
Yeah, this is interesting. It sort of brings me back to we had a conversation yesterday with Pat Gruber, CEO of Jiva, a public renewable fuels producer. He was talking about when they're thinking about, because they're doing net zero or negative carbon produced fuels, so they're talking with a lot of the farmers about their tillage techniques. And obviously Gordon brought up the soybeans from South America, looking at the actual sourcing in order to be able to decrease their CI index, because obviously that's tied to the LCFS credit that you'll get. And we actually have some questions from the audience. I think we sort of hit on this one before, but for Brennan Combyne, what barriers to adoption do you face in getting stakeholders in the ecosystem to use your platform, and how can you accelerate adoption by farmers? What are you doing to convince them?
Yeah, it's a fantastic question. I think probably first and foremost, it's establishing trust. And I fundamentally believe that there's two ways to establish trust with the farmer as kind of a new technology solution. The first is showcasing, hey, we're working with some of the other tools that you already trust. And so by integrating directly with your farm management system or your precision ag platform, I mean, specifically, we've got 7 integrations lined up that'll be launching later this year, with exposure to over almost a quarter of all farmers in North America, right? So it's pretty significant. And so by integrating and helping create kind of the market making layer for some of these tools, immediately we're finding some trust there. The second element is again, your trusted training networks. I want to do business with the people that I want to do business with, and so by going onto the platform, you can literally find your trading partners around you, so to speak, and say, oh, I see this specific buyer from this company, or if I'm a buyer, I see, hey, these are some of the farmers that I'm already doing business with. And again, because of it's a one-to-many approach, we can kind of share the deal once. All of my trading partners know about it immediately, versus kind of that one by one phone call process. So I think that it's building on this trust element, and again, this comes back to our core values. We are neutral, we are transparent, and we are complementary to either your existing production practices, regardless of the color of equipment you use, regardless of the precision ag platform you use. Optionality, independency is critical in the agricultural landscape, specifically to farmers, and so we want to support every single farmer. And again, that starts with trying to build trust in a variety of different ways.
On this point, though, it's really interesting because it comes down to how much stickiness can a platform create with the farmers. Because if the farmer wants to direct all of his or her grain production through your platform, then you have to get the participation has to come from the commercial. If the commercial knows that the farmer is not sticky or tied to a specific platform, then they can hold back. So the differentiation between some of these platforms is it's direct to consumer. Let's just say Dreyfus, direct to consumer with a platform that's sponsored in between, and there's no one else bidding on that platform. And then there are some platforms where there are 4 or 5 different participants trying to buy the same bushel. So I think that's like the different business model, is trying to figure out how do you create the stickiness and where can you get the adoption most? Is it going to be on the commercial side or the producer side? Because you need one or the other.
It's a fantastic point, Gordon. I would say that I have hard data to back it up. We know today that if a farmer has 5 or more trading partners on Combyne, 70% of them are coming back on a regular basis to do their deals, right? We're creating those efficiency gains. And so indeed, like in the cases where a farmer is quote unquote locked in with just one buyer, we're probably not going to help them. The only way we could potentially help them is if they're using a digital tool. Most likely they're probably not if they're only dealing with one buyer to begin with. But if they're using digital tools, we're going to be able to sync directly into them. I'll give you a hard example on that as well. I spoke to a farmer earlier this week who told them about the integration we're doing with one of the farm management systems up here in Canada. It's the largest in Canada. And I told him exactly how we're going to be able to flow the contracts directly into a system. And all he has to do is basically confirm, yes, these are the deals of the contract that I did, and so on and so forth. He says, you're going to save me probably what feels like 3 weeks to a month of data entry that I do on an annual basis just to put this information from the PDF form or the paper form that I get into my system. And so by just saving those efficiency gains, we know that we're finding stickiness.
Yeah, no, I know it's going to happen. It's just a function of finding like what is it exactly that the farmer wants, and then how do you make his life as easy as possible. And that's exactly what you've done with your platform. So.
Yeah, so here's another platform question from Nell in the audience, and I hate bringing up specific company names when they're not on the platform, but Nell asks, Bushel recently announced their Series C and seems to be getting traction in digitizing the grain marketing transaction process. How do you see working with someone like Bushel, and do you think they'll rebuild the marketplace?
Yeah, another great question, and I think specifically Dallas. I mean, he knows the Bushel product a little bit better than I do, you know, there's the way that you have to think about it is that there's a couple different white labeled buyer facing tools. So Bushel is one of them. Then you have Commodity by Bar Chart. DTN has a product, and R. O'Brien has come out with one. There's another company called Eka. And the point is that all of these companies provide tools and features that focus explicitly on the buyer procurement process and also the load and the delivery and execution of that trade. Remember, we got prospecting, negotiation, execution. And so they really focus on that execution side of things. They've done some fantastic and really innovative work around digitizing those load tickets that farmers literally, I'm susceptible to it, literally would just stuff it into the logbook in the truck and forget about it. And now they've helped digitize it, which is probably one of the biggest value adds for farmers, is because now they don't have to worry about trying to go find that load ticket from that load that they just dumped and trying to get it to their accountant to kind of, you know, double check that we did sell that grain. I think that over time we're going to continue to integrate with them, and we tend to focus more on integrating with the farmer-facing tools, largely because we know that if the supply is shown, buyers tend to show up. And again, we're not here to get in the middle of the relationship. We're here to augment that into the digital age. And so, you know, fundamentally, we have had some conversations with Bushel about integrating, and I think over time we're going to get there. It's just a matter of kind of dotting the I's and crossing the T's and figuring out exactly where our APIs can match up.
And,
great question, though.
I guess Gordon or Dallas, any thoughts on that?
And I think this really was my main reference, is you have two different approaches, right? You have Bushel, it's like Dreyfus direct to farmer, and then you have Combyne, and it's neutral. And you have Combyne, which is very similar. Dreyfus can go to farmer, or it's another peer to a farmer. So it's a different approach. And the question is, how far do you move one way versus how far does Bushel go the other way? Because you're coming at it from different directions.
And I think our last question will be from the audience, from Kathleen. And we were talking about carbon sequestration before, and how do you view the multitude of carbon sequestration incentives as counterproductive to furthering industry-wide shifts? What risks do government programs pose?
That's a tough one. I mean, I guess the one thing that we always struggle with the most is you know, having something that's, you know, decided on what is what. because it's very unclear on exactly what constitutes a carbon credit, or this is an allowed practice and this isn't. So like a standardization is difficult as far as that goes. Now, what the government does, I have no idea how that's going to play out. But I think from our perspective, if there was anything that was like more of a standard, I think that would be at least helpful for adoption. It's like, you make number 2 yellow corn, we want to make number 1 carbon credit, right? I mean, that's because that's what producers do. So, having more firm parameters, I think, would be helpful to encourage more of these adoption practices. Now, how we get there, I
have 2 comments. Just in terms of like the global consumer, the issue would be that you end up with a government mandate that forces the cost of production in the U.S. to a point where the U.S. can't compete versus Argentina, Brazil, Ukraine. So that would probably be my first flag. And the next one would be, as Brennan mentioned, you're already doing what you can to protect your land, preserve your land. And in the U.S., existing practices wouldn't qualify for those credits. So someone who was not necessarily a good steward, who began taking care of their land today, would benefit based on the current metrics, whereas Brennan's farm would not. And I think that's a little silly.
Perfect. Well, this has been a super fascinating discussion. I know that I've personally learned a lot, and I'm sure everyone in the audience has as well. So Brennan, Gordon, Dallas, thank you very much for joining us. And next, I'll turn it over to the next panel of the day, which is going to be Farming Carbon's Future with Truterra, a subsidiary of Land O'Lakes. Thank you very much.
Thank you.
Thanks.